Let me quickly bring on board Rakesh Arora, Managing Director and Head of Research with Macquarie Capital Securities. Rakesh, good to have you back. Thank you for joining us. Before we get into specifics, what's going on? Nifty is up more than 6.5% from the recent low. Are you advising your clients to exercise caution, or it's too early to jump off the bandwagon?
See, we remain bullish. Our target for Nifty is 6,900. So we still have a decent 15% run-up that we think market can do from here on. And I don't think we are in any hurry to really book profits here. So buying on dips remains the call.
You mentioned that you have a year-end price target of 6,900 on the Nifty. What is the thinking behind that number, and how have you arrived at that number of 6,900 on the Nifty?
Okay, so that's based on 15 times PER on FY14 earnings estimate. So we are hoping that the earnings will grow at around 13 to 14% over what we saw in FY13. And 15 P multiple is based on our expectation of GDP growth of around 6.2%. So it's a very conservative numbers that we have into building that target. And second half of this year is going to be really more positive. One, because all the orders that we are seeing on the infrastructure side, already I think $2 billion worth of orders have come on dedicated freight corridor. Two new power projects have been announced, one by Tamil Nadu State Electricity Board and other by Rajasthan. And then government is going to unleash 3,000 kilometers of roads project orders. So all these things means that the momentum in second half will pick up. Secondly, hopefully we get a normal monsoon. That should ensure that, interest rate cuts also pick up in the second half. So we are more bullish about the second half, and we think that that will translate into markets going up higher and reaching our target of 6,900.
Will that also mean interest in the cyclicals at this point? Because that's been lagging in the market, Rakesh.
Autos have been doing extremely well, and I think it's only the real estate which is lagging right now. So yes, interest rate sensitive should pick up in the second half once interest rate cuts start to happen in a much more meaningful way, and also the transmission also starts to happen because PSU banks are already talking about lower NIMs because they think that they'll have to push through the interest rate cuts which RBI is doing now.
Rakesh, at a time when Indian economy is on a cusp of recovery, why are markets so pro-defensive stroke consumer and healthcare names? Yes, healthcare and consumer names, they offer some visibility in the near term, but the real value or the real opportunity is in the cyclicals or in the industrial names. Why are markets ignoring them?
See, I think if you look at the FI holding data for the top 200 stocks in the country, they have actually done all-round buying across sectors in Jan to March quarter. So except for real estate, their holding has gone up everywhere, in each and every sector. So it is not that they are buying just consumers. Secondly, I think, consumer staples today is benefiting because of the global inflation coming down, and, their finished product prices don't come down as fast. So they're seeing a healthy margin expansion, and that's why you're seeing the results are good. But what has really surprised us are the results from the power sector, which has turned out really good, starting from NTPC onwards. Secondly, even cap good companies like BHL, their first estimate has been extremely positive. So I think there are green offshoot on the cyclical sides, and I think that is where the investor should focus on. That is where the maximum return would happen in the second half of the year.
What happens then to the traditional pharmas and defenses in this market, which are trading at new highs?
See, we are underweight on consumer staples and pharma because we think valuations are extremely high and they are building in much more, which may not sustain. So, and secondly, while these stocks may not fall down immediately, but they are going to underperform in a rising market. Difficult to see, HLL or ITCs of the world really go up another 15% from here on. While we are talking about market going up 15% in the next 6-8 months' time. So clearly, new leaders would have to be found in the market. And I think the scope is there mostly from power, infrastructure plays, etc. Those are the stocks which will take leadership in the second half.
So Rakesh, if you expect the Sensex to appreciate by about 10 to 15% in a matter of 6-8 months, I'm sure you've got a ready list of stocks which will appreciate between 25 to 50% in a matter of 6 to 8 months. So why don't you share that list with us?
Okay, so I think the key stocks that we like are L&T, Axis Bank, SBI, Coal India, General Steel and Power. So these are some of the 5 names that I can rattle off where we think that there's an appreciable upside in the second half.
Just let me get those names right again. L&T, Coal India, Axis Bank, GSPL. Which is the 5th one?
SBI.
SBI.
State
Okay.
Bank of India.
Let's start with Coal India. The problem for Coal India could be the big OFS or the government stake overhang. So at a time when nearly 10% of government paper is likely to hit the primary market or the secondary market in next 1 or 2 quarters, what makes you bullish on Coal India?
Now, see, obviously that is an overhang, and the stock has corrected from 380 rupee level to now less than 300, and it's pricing in the worst kind of scenario. But there's a chance that looking at the market conditions, government might do a 5% buyback. So that can really change the calculations which a lot of investors have who are hoping to buy this company at lower valuations. Secondly, also remember that if divestment looks a little bit difficult, government will push through special dividends from all these cash-rich companies by September, October. So all the pain that you see in these names would not last more than September. We'll have a clear trend emerging from these companies. Meaning they're hard to find companies like Coal India which have 14% free cash flow yield. I think it's gone to an absurdly low level of valuations, and I think there will be enough demand for this paper as and when it comes to the market.
What explains the underlying strength in autos? Yes, interest rates have come down, but the transmission has not happened. Diesel prices have gone up, which means the demand for diesel vehicles will only come down. Are you a bit surprised with the underlying strength in a Maruti, Tata Motors, or for that matter, Bajaj Auto?
To some extent, yes. But see, Maruti is a big beneficiary of VN depreciation, and we are not really done with the depreciation as yet. So I think Maruti will continue to go up. Tata Motors is more of a company-specific story where they have certain models which are coming out and the sales are doing much better. They're coming off a very low base, so they'll continue to grow much faster than the system. So these two stocks we continue to like and think are the key holdings for us in auto space. Clearly, I think market has moved up too ahead in terms of Bajaj Auto, etc., hoping the interest rate cuts would revive the demand. So I think investors can look to book profits in Bajaj Auto and other two-wheelers, and probably hold on to Maruti and Tata Motors for now.
What's a call on a Reliance at this point?
See, we are positive on Reliance. I mean, Reliance is the largest underweight for FIs in India, and at some point in time, the interest is going to come back. So I think downside is extremely limited, and the capex program that they're running would start yielding results from next year onwards. So I think during the next 6 months or so, market would start factoring in the growth which is coming in the company, and the stock can outperform. So at these levels, we are a buyer on Reliance.
Rakesh, for Nifty to move up to 6,900, maybe 2 or 3 large heavyweight stocks will have to chip in. And if I look at the composition of the index, good quality stocks are already trading at a new all-time high, be it HDFC or HDFC Bank, Sun Pharma or TCS. So which is 1 or 2 large cap Sensex stocks or Nifty stocks you're bullish on?
Meaning most of these stocks that I quoted were all large cap names only, meaning we are hardly pushing any mid cap idea. So, meaning Coal India, NTPC, SBI, meaning these all can really move the market, quite strongly. So that's the point I've been making, that new leaders will be found because the older ones are either looking too expensive or are reaching at the peak of their earning cycle. So it is cyclicals which will really lead the rally in the second half.
One final and follow-up question. You are bullish on domestic-oriented businesses. What about global focused businesses, IT, pharmaceuticals in general? Because at a time when global growth is making a comeback, government is committed to increase the overall focus on exports. Do you think somewhere growth or export-oriented sectors would also surprise on the upside?
See, IT has done well in the last, quarter, and it's only the Infosys results which have really spooked the whole sector. But from here on, see, there are two things. One is if Indian economy is going to do well, rupee should start to appreciate. So that will be detrimental to these export sectors. Number two is that the fine print of the proposed visa laws are really, anti-Indian companies, not just outsourcing. We don't think they are anti-outsourcing, they are anti-Indian companies. So that is where we are a little bit cautious on the IT names and, and not really keen to buy HCL Tech or TCS at these levels. For pharma companies, I think it is more of a stock-specific story. So depending on, which companies have, new drugs coming into the market, people can take a call. But generally speaking, I think, the sector has already run up well ahead of itself and should take a breather here. So I don't think IT or pharma can outperform in the current market.
Right. What about telecom, Bharti Airtel?
See, Bharti has seen a good move, and we are positive on telecom sector per se, because we think that competition intensity is going down, and a little bit of price hikes can actually change the scenario quite dramatically. So we remain positive on telecom space. We prefer Idea Cellular better than Bharti because of Idea being a pure play on India.
Rakesh, at a time when global consumer companies are increasing their stake in their India arms at a substantial premium to the current market price. First it was Glaxo Consumer, now it is Unilever. Do you think it is time to revisit expensive consumer names? I know they are expensive, but do you think for someone who has a patience or a time frame to hold on to consumer names for next 3 years, do you think from the current juncture also these expensive consumer stocks will make money?
See, that's the theme which is going around: buy expensive and stay expensive. First of all, Hindustan Unilever, I think we had a target of 580 for almost 1 year now. So I don't think it has been purchased at an expensive valuation. Actually, the company took advantage of the fall in stock price, and it did appear that they are making an offer 20% higher than the market price. But actually, the fair value according to us was 580. So it's not really gone too much beyond that. So I don't think this is a trend which will continue. If you have to buy some business or buy a substantial holding into any stock, you buy it when things are going to be, bad, rather than when they are at the peak. So I think, this is a reflection that things can moderate, and these companies are hoping that they will be able to increase stake.
Cement also has not been able to come into a decisive trend as of now. Given the earnings that cement companies showed, what's called the Ambuja, ACC, Ultratech?
See, cement, we are a little bit cautious at the moment, because cement stocks had gone up, at to a very high level last year, and consensus estimates were starting to build in, lofty margin assumptions. Now that has come untrue in the last 2 quarters, and we are seeing downgrade cycle, pick up. We think that the consensus estimates are still extremely high. We expect at least 10 to 15% earnings downgrade still from here on. And also we are heading into weak season. So I would say that there is no real hurry to buy these names. Wait for at least till September, October. And, probably we'll get the stocks 15-20% cheaper from here on.
Rakesh, I really want to revisit your, preferred buys. You like State Bank of India, and you're also bullish on Axis Bank. One would argue that they are, State Bank of India and Axis Bank, they're two ends of the spectrum. One is quality, other is size.
Yeah, see, basically the idea is to play the revival in investment cycle. So Axis Bank is highly levered to it, and that's the reason we have been pushing Axis Bank. And SBI, if I am saying that economy is going to do well, if the largest bank is not going to do well, then who is going to do it? And already the retail part, which is captured by the private banks, is already factoring in, much better scenario. So we are not really going all out and saying buy, the mid-cap PSU banks as yet. So we are moving from, private banks to kind of in-between situation right now.
Do you like anything from the consumer space at all?
See, consumer, from the large caps, we like Hindustan Unilever, and from mid caps, we like Imami.
Any reason why you're bullish on Emami? Because I was looking at the total, liquidity for Emami. It tends to be a liquid stock, and for someone who is serving large institutions, why are you hot on a liquid stock?
No, it's just that the business model seems okay. So if somebody is looking for a mid-cap idea to hold for 3 years, then Emami is the name. Probably then the liquidity may not be a big issue. But, generally speaking, we are saying that stick to large caps. We are in the early stage of recovery, and I think there will be enough time for us to buy the mid-caps.
All right, Rakesh, we leave it at that. Thanks very much for joining us and giving us your perspective on the markets. Really appreciate your views.